One of Malaysia's largest integrated oil and gas companies, known as Sapura Energy Berhad, was once regarded as a worldwide rising superstar in its industry. It held assets and operated in more than 20 countries globally. Its reach had landed them around North America to parts of South America, even to Europe, to natural resource-rich countries around Africa, the Middle East, and several other countries in the Asia-Pacific region. Sapura Energy Berhad, in other words, is a national brand that has thrived in the world's most competitive markets. One can also easily suggest how important the company is to the entire Malaysian economy. It has directly employed tens of thousands of workers both domestically and worldwide, and has contributed a massive amount of tax payments every year. At the time of its peak, Sapura Energy, through ticker symbol SAP-NRG, had a stock share price of about 4.9 Malaysian ringgit, which was recorded back in December 2013, valuing the company at least 26.8 billion Malaysian ringgit, which was approximately about $6 billion. This has also made Sapura Energy one of Malaysia's largest companies, ranking side by side with leading Malaysian brands. It is also understood in the investment era as amongst the most loved stock symbols and, likewise, loved by the government itself. At the same time, Sapura Energy had also been reporting massively in its actual income statement, where in 2015 it had total revenue of about 10.1 billion Malaysian ringgit or $2.4 billion. Slowly but surely, Sapura Energy, as it began to rise, could have been one of Malaysia's too-big-to-fail conglomerates, a term denoted companies that have become too big to fail. However, unfortunate events would occur throughout the life of Sapura Energy, which would drag the entire company down, which can already be seen through the company's market valuation. As of the time of writing, Sapura Energy's stock price is trading at 0.045 Malaysian ringgit, valuing the company at just 800 million ringgit or no more than $200 million. How could a company that was once valued at more than $6 billion out of nowhere fell to having just less than $200 million? Its financial statements also followed the subsequent downfall. Its annual report, published in the latest year as available to its investors relations website, shows that Sapura Energy had reported just 4.1 billion Malaysian ringgit or $953 million. While a halving in total revenues may not sound too bad, one should not be fooled by this, simply because the company at the same time reported a very big loss. The company had posted a negative net income of about 9 billion Malaysian ringgit or $2 billion, a loss that has harmed the entire company and would most likely drag the viability in the long term. Losing twice the amount of money it had generated in total sales is not a normal occurrence. So what happened? What has happened to arguably not just one of Malaysia's largest companies, but may have been one of the world's largest? At a $6 billion valuation, it could have easily landed the company into the top 1,000 globally. Some prior data had even stated that it was the second largest integrated oil and gas service provider in the entire world, just behind Italian giant Sapura S.p.A. But today, it would have been nothing but a company all but forgotten. Well, let us first start with the challenges faced in the earlier days. Sapura Energy Berhad had fallen due to several reasons. Industry experts, media articles, and even official company statements and executives have voiced their reasons. We will dive deep into every single cause of its failure, starting with oil prices. Every single company that relies on commodities always dealt with this single issue: price fluctuation. When the price of oil and gas fluctuates, so do the company's financial statements, which then reflect the sales of a company and even stretch to its company valuation. Hence why even some of the largest oil and gas companies globally, such as Royal Dutch Shell, have seen their company valuation staggeringly fall whenever oil prices fluctuate downwards. The two companies do not operate in the very same specific sector. They, however, are still subjected to the whims of the entire oil and gas prices. The case behind Sapura Energy can be traced back around 6 years ago, at a time when oil prices suffered a meltdown. News articles have cited that the meltdown in prices has caused Sapura Energy to be the biggest casualty of commodity fluctuation. Between 2011 to early 2014, oil prices were trading upwards of $90 a barrel. But as these charts have shown, 2014 saw an oil price of just about $98.35 a barrel on the 1st of January, but ended the year with a major drop of just $53.94 a barrel. Following the downfall of oil prices, a number of other companies globally, even normal businesses, would see slower growth than usual. Thus, the impact on oil companies would be felt rather more painful. But do take note that this is also just one part of the problem. Another issue raised is the company's overall overbook, which can also be connected to the falling oil prices a few years ago. Around mid-2014, the total order book of the company stood at around 30 billion Malaysian ringgit, a massive figure which also saw the oil prices at $110 a barrel. Yet just a year later, as the oil price collapsed, the order book had followed the fall. By the end of 2015, the order book had fallen to 25.1 billion ringgit, then by the end of 2016 at 21.3 billion Malaysian ringgit. However, despite falling order books, the company still cited that they still found ways to secure new orders, but the value of its total order book does not seem to reflect an upward trajectory, but rather the opposite. Moreover, its falling order book could have also been initiated by falling demand for more oil and gas services, or even possibly due to the company's ability to secure bookings, which will be discussed later. If we look at the company's landscape today, the order book looks way off the charts compared to 2014. In 2021, Sapura's total order book had registered a measly 7.5 billion ringgit. The downward trajectory of not being able to secure a book was cited to be rather difficult. In an interview published by Edge Markets with Datuk Anwar Taib, who was the current CEO of Sapura Energy at that time, stated that, quote, "The question is not whether you can win bids, but also whether you can win bids with enough risk mitigation so you can be comfortably delivering," end quote. This may suggest that the company is not looking for a larger bid value, but a profitable bid. This can explain the falling order book in recent years, but unlikely to be connected to the downward trajectory felt in the past. Finally, the other aspect of the issues dealt with by Sapura Energy can also be found in its balance sheet. Ever since the major oil collapse of 2014, Sapura Energy has been publishing net losses after net losses every single year. A quick summary and calculation from 2013 to 2022 shows that the total loss of the company amounted to a massive 13.1 billion Malaysian ringgit, with the largest coming from the latest financial year. How can the company thrive amidst losses? Well, of course, they have to either take on debt or sell assets to raise funds, which, from a glance at its balance sheet, it did both. Net debt rose from 4.9 billion Malaysian ringgit in 2013 to over 10 billion by the latest year, whereas equity reduced from 6.7 billion in 2013 to just 254 million in the same timeframe. All of these issues led to the company obtaining a restructuring order under Section 368, which states, quote, "to refrain and suspend legal proceedings against it while enabling the group and its subsidiaries to engage with its creditors without being disrupted by the threat of litigation," end quote. In simpler terms, it wants to fix its debt issues by renegotiating its loan agreements. As the country's former largest oil and gas service company, it would, of course, see some form of government intervention. Initially, we saw the entrance of a state-owned enterprise known as Permodalan Nasional Berhad, which increased its ownership stake in the company to over 40% around September 2018 after PNB committed to taking up any unsubscribed right shares, which was considered at the time as the lifeline of Sapura Energy. After PNB took its share, several lawmakers had also been voicing recently, citing that they should not let such a big company fall. Some government officials wanted to bail the company out, while other officials have said that they should leave it, sparking debts left and right. The PNB purchase was even criticized at one point, and some options have also been opened where they would just let the company be purchased and taken over by Petronas. Well, there is a long argument to this, but anyway, the fall of Sapura Energy Berhad was an unfortunate event. Do let us know, however, what you think. Thanks for watching.